All right, welcome. Okay, so now I want to quickly, brief us and explain to us how we can trade volatility 75. Okay, let me see if I can still enter this trade. Okay, it's a little bit too late. Okay, but don't worry, I will explain. Okay, so now this volatility is on the 5 index. So let's assume you want to trade this pair, you don't understand price action. They've been talking about trend line, you don't know how to draw a trend line. They've been talking about breakout and retest. Say, must I know all this thing before I trade this thing, before I make money from it? Okay, calm down. Okay, and maybe you have watched many videos that they actually fill your screen with indicators, and indicators did not even allow you to see the market, the chart itself, and you have used them and you have lost. Okay, I have a better news for you today. Despite that you might not have knowledge of price action and you cannot trade price action, you can still trade volatility on the 5 index and make money. Okay, so what will you have to do? It's very simple. Two indicators, just one particular indicator, but it's going to be twice that you're going to install it, and that's moving average. You can see it on my chart. Moving average is enough to actually trade volatility on the 5 index. So what are the period of the moving average? 250, and it must be exponential. So you click on F, the F sign, then you add at the front here you have the F plus. I don't know whether you use an iPhone or anything. This F plus sign. So you click on it, then you would search for moving average. Then you can see moving average here. Now you choose moving average and you edit and put the values there. Okay, but now looking at this now, this moving average, you can see I already installed mine. So I just show you how you click on yours. You click on it, then the period have to be 50, the shift is 0, the method should be exponential, apply to close, choose any color and your pixel have to do with thickness, then the color will be thick, any color you choose. So I use 3 pixel because I want it to be a little bit thick but not very thick. So you can use 1 pixel, 2 pixel, 3 pixel, 4 pixel. So I chose 3 pixel, then I click on done. Now you click on done, you have to click on done, then you repeat the process F plus. Now this time, most of the time, many people make mistake by clicking on the same moving average again. Don't click on the moving average, click on the F plus sign. Then after clicking on the F plus sign, click on moving average again. Then this time around you change the period to 200, the shift should be 0, the method should be exponential, apply to close, change the color in front of your pixel, make sure the color change so that you will know that there have been a crossover. You are actually working with the crossing of the moving average. Then you click on done. Now naturally this moving average, when it crosses in forex, we call it dead cross. So we call it dead cross when they cross, giving you opportunity to make entries, telling you the direction of the market. But so far so good in forex, they will tell you to use it on a higher time frame, like 1 hour, like 4 hours, like that. But in this video, for the sake of scalping, I will be showing you how to use it on a very low outline frame, like 5 minutes and 1 minute. Okay, so let's quickly look at it. Now one opportunity just passed not long ago before I started this video and I could not enter, so I cannot just jump into the trade again so that I don't just lose from the trade. Okay, I need this to actually function, so that's why I have to pause the video. Now if you notice, where will you make entry? Like I said, when they cross, they call it dead cross. Crossing of exponential 250 moving average is a very key crossing in forex. So, and it's applicable to anything, including the volatility pairs, the indices. So most especially the volatility is on the 5. You can see here at this point the 50 moving average that we have, that is yellow, came to cross the 200 moving average. Now when it crosses the 200 moving average, what will you expect? You expect the market to actually move immediately. Now in the case where the 50 moving average is crossing from below, crossing it above, then you know that that market is going to buy, like in this case. Then you make your entry, make sure that it is very close to the moving average. Now this is a very serious condition you must pay attention to. Sometimes there is possibility that they will cross each other, but the market will be around this area. In this case, don't trade. Make sure in this case, don't trade. Make sure the market return back to a level like this, because if you make your entry around this area, there is possibility for the market to do the same thing that they did here. Then you will be in the market till it gets here before the market eventually plays out. Now, what of if eventually the market did not really reach that point before the moving average crosses again? Then what happens is that you are losing already. Now, with this particular method, I will advise just take just $5 with the lowest lot size. That's on 0.001. Look at the profit target that you're looking at should not exceed $5. Now the market can deliver up to $10, but don't risk to say you want to take the $10 opportunity. Once you reach the $5, boom, enter. Now when you see that the market have pushed back to this point, then you see it's very closer to the market, to the moving average, then make your entry. Then boom, you make the money. That's number one. Let's look at the opportunity for sell. Okay, now this is sell. Now you will look at what I mean in the sell here. Now here the moving average crosses, but I will not be the one to lie to you that you will make entry immediately. Now look at it. When it cross, the moving average crosses, then the market has already been far below. The market is around this area. Now it's not closer to your moving average. If you look at it, your stop loss normally supposed to be above your moving average. Now if you calculate from here to here, you are having about $6 or $7 stop loss compared to the profit you want to make, $5. Even though the market rallied and plays out to give you up to $4 or $5 opportunity, but that is not the best entry. Now where will be the best entry? Coming closer to the moving average. Exactly. Wait for the E to pull back to any of the moving average, whether the two moving average together, the 50 and the 200 together, or once it touches the 50 moving average, then you can make your entry. Now it touches the moving average 20, boom, the market sold. Give you up to $10 in this case, or even more than, it was even more than $10, from 60 to 45. That's $15. Now it plays out, but remember I say just take $5. Let's look at this also for the opportunity of a buy. Now look at it again, the same thing I said. The moving average crosses here, but the market is already here, far away from the moving average. Now what did you expect is a pullback. Now the market pull back here. Now if you enter around this place, you make profit also, though it's not up to $5 before the market draw back, but this 2 point something dollars also. I believe when you see the market returning back, you will even close, worst case, at break even. Now you see the market coming on the moving average 200, giving you opportunity to buy. Then boom, the market gave more than $5. Then again, let's look at another opportunity. Okay, now look at in this case. Now the market did the same thing, cross over here. Then you are waiting for the market to pull back. Now look at it, market move above. In this case, you've seen the market above your moving average. You should not enter, because you are waiting for it to touch the moving average and to give you opportunity for itself to see a little candle, maybe one short candle, that's one sell candle, but eventually the market break above. Now the moment the market breaks above, now you know that there is no reason for you to make entry for a sell again, because it's now above the moving average. Now you see it save you from the stress. Then the market crosses again for a buy, then you make opportunity for a buy. Let's look at another thing. Yeah, now this was a perfect entry, the market crosses here, then the candles also were also there, the moving average crosses there, and the market was also there at that moment. Then you enter your profit, your trade, then $5 to take your profit. Now the market pull back again towards the moving average. You see the market pushing up. That depends on you. You might decide to enter again. You keep mentoring the market. Now you can see this is on 1 minute time frame, and you can see how the market is consistently giving the same thing. The market crosses very closer to the moving average. You're setting a stop loss of just $2. I believe that $2 should not be issued to you because it's below the moving average here. It's 843, and this you're entering at 844 point something, so it's just 1 point something dollars loss. Then you're taking $5. You can see the market delivered the same way. Look again, in this case we're looking at this point, this crosses, then the market give you opportunity, boom, it gave you the $5 profit. Okay, this gave about $3 profit, not up to 5 in this case. Then in this place the market crosses, give a very sweet entry because it was exactly at that spot. Also, you make your entry more than $5 already, just like that. The same way here, you are waiting for the market to pull back, then you see the market pulling above, you don't make entry here. Then here again, the market has crosses here, cross there, far above, but here touching closer to the moving average, then you make your entry, $5. All right, I believe that with this few example, I will advise you, first and foremost, practicalize it on your demo account. Don't go straight to your live. You can see I did not make entry, despite that I'm explaining. I did not want to prove master and boss and have a running loss in trade, in as much as the condition has passed. Okay, so you just wait. When the conditions are right, you make your entry, and you boom, you make enough money. All right, thank you. So I'll plead, please subscribe if you find this channel helpful for you. To you, please subscribe, and also please tell friends to subscribe. Okay, we need more subscribers, and I promise, like I used to do, if you have not watched my previous video where I give indicator for those who are using PC, watch, and you will enjoy it. You will enjoy all of them, and all of those tools I give them free of charge. So tell friends, tell a friend to tell a friend to tell a friend to tell a friend. We can do it this month of September, reach 1,000 subscriber. I'm counting on you. Thank you. God bless.